What's up, guys? Matt Voke. Bitcoin has crashed. It is currently down 47%. You are freaking out, I'm sure, and I get these questions all the time. What do I do now? Well, this video will help, hopefully. There's two things I'm going to bring to you. One of the largest asset managers, Fidelity, who has $4 trillion under management, just released an awesome report on why Bitcoin. It's titled Bitcoin First. So we'll cover that, and then I've got an interesting, take on top of that report as well to help you guys. Basically, what you need to do here for this is zoom out. You're looking at this on the hourly, on the 4-hour scale, etc. You're going to be freaking out. Bitcoin is, and you know this, a volatile asset. So we're looking at right now it being up approximately 1,100% from roughly the bottom, which is crazy. So 1,100% from the bottom or 47% from the top, it's both. But what do we do from here? So let's jump into it. Bitcoin First, like I said, just released by Fidelity 2 days ago. This report is great for an overview. I'll very, very quickly run through it, and I'll put the link in the description below if you guys want to check it out. But it basically says Bitcoin's a novel asset that has allowed us to monetize things previously never even thought possible. Once investors have decided to invest in digital assets, the next question becomes which one, whether it offers some potential reward or upside, as some of the newer digital assets that can potentially offer you more beta or more alpha. They're saying that you need to get into Bitcoin first because it is a monetary good. You've probably heard that it's digital gold, it's the best store of value, it's hard money, etc. That's kind of what they're arguing here. Bitcoin is fundamentally different than any other digital asset, and I would have to agree with that. There is not necessarily a mutually exclusive relationship between the success of Bitcoin and other networks. So Bitcoin can succeed and other digital assets can succeed. Those other digital assets like Ethereum and else can succeed and Bitcoin can fail. What they're also advocating is that Bitcoin's been around the longest and it should be the point of entry for people. And I agree with this wholeheartedly. If you're getting into the space, you should understand what this is to know that it's not snake oil, it's not smoke and mirrors, so that you don't just hold something to see the number go up, but you actually fundamentally believe what's backing it, so that when we have a 50% drawdown, you don't get emotional in seeing the numbers on the screen and not know what to do, and you sell out of this asset, which is literally, in my opinion, the hardest form of money that we have right now. Bitcoin is that monetary good, and it is the best one that we'll cover right here. We believe that money is a tool that allows exchange. Humans iterate in search of the best representation of money. The origin, and I've talked about this before, the origin of money wasn't barter. It wasn't trading a fish for a chicken. It was a credit-based system of I just loaned you these 2 fish, previously, so you can give me this. I guess you don't really loan a fish. You take the fish. Give me that 1 chicken today. And you have temporary ownership on this virtual ledger. Now it's codified in a triple entry system on Bitcoin. Leads us to questions why some things become treated as monetary good while others do not. There's basic principles that we've known for what makes good money or sound money or hard money. The durability, the divisibility, the fungibility. The fungibility meaning one of something is exchangeable for one of something else. I would argue that fiat currency is fungible, where $1 is the same as 4 quarters. So that $1 is the same even in multiple different forms. It is portable, that it's able to be taken virtually anywhere. Obviously, a gold bar isn't. Verifiable, that there's no even argument that Bitcoin and blockchain is infinitely more verifiable than dollars and gold in every sense, especially speed. Scarcity, it is programmed into Bitcoin, 21 million, period. Gold is very good on this because it is a finite supply of creation of the world and all of the things that have bombarded it, the earth, historically. And then the track record, obviously, Bitcoin is receiving the minus there. But as on here, that's the only minus that we have on this page. So you can see that Bitcoin's creating this use case that it previously had as a digital peer-to-peer exchange. Now it's more of a monetary good. This is the hard, sound money, and this is what the new narrative is for Bitcoin. And I agree that it is probably more powerful than that peer-to-peer exchange of value. Driven by that enforced scarcity, like we talked about, the 21 million Bitcoins are hard-coded into the protocol. Due to the halving cycles that are approximately every 4 years, less and less Bitcoin is created at every single time, and then it will never truly reach, it'll just be under that 21 million Bitcoins in 2148 or whatever that year is. No other digital asset possesses an immutable policy like Bitcoin does. There are some S coins that have been made that do, but they don't because they could be altered sometime in the future, whereas Bitcoin has created this shelling fence of we will never do this, and it's gotten into wars and driven out many very, very high-ranking people in that, high-ranking, in the Bitcoin's system network because they didn't agree with that. So it is a very, very credible sticking to the fact that there will only ever be 21 million. Not just that it's programmed, but that number will never, ever, ever change. That will always be the case for Bitcoin. These network effects, if you want to know about the telephony system development, every single node that's added to these networks increases the power and the potential and the value of these networks by a factor of squared. So it's an exponential increase in the value of these networks. The incentive to choose the right money is much stronger than any other network, such as a social network, a telephone network, etc., because it is a network of money. And this is why Fidelity also said in a separate document that when states start looking at this, the first and second state, etc., that start accepting this are going to have such a marked advantage that others will be scrambling, and then there's going to be a race to see who can stockpile this. If investors are looking for a digital asset as a monetary good, one with the ability to act as a store of value, then they will naturally choose the one with the largest, most secure, most decentralized, and most liquid network, SHAC. Bitcoin is the first truly scarce digital asset that's never invented, received a first mover advantage, and maintained this advantage over time. Note that while Bitcoin dominance or its market capitalization as a percentage of the entire system have declined, this is not due to shrinking in size, but growing in the pie of what blockchain of digital assets are capable of. So as we see in this chart here, Bitcoin was the only thing for several years, and then Litecoin and other coins, Ethereum, get invented and get more use cases. However, the number go up technology of Bitcoin and the utilization, the size of the network and everything is lower left to upper right. So their case, their argument is that Bitcoin is different than all of the rest of the assets that are in this chart for dominance, being that pie is growing and Ethereum and other networks are creating new use cases. The demand, the raison d'etre for Bitcoin exists grows every single day. A competitor that tries to merely copy Bitcoin's entire code will fail, as there will be no reason to switch from the largest monetary network with these Lindy effect and the benefits of like we were talking about the telephony system compared to the actual one of the ideal size. You need a marked advantage of at least an order of magnitude better to cause people to leave the network, such as Bitcoin, to go to other things, and we haven't seen that for a monetary good. There are some other functions, and this is part that I disagree with this paper on, that have smart contracts, and they have different deliverables that are separate from the monetary good that drive the value, but not the actual monetary value of Bitcoin. And we can see that here versus the other competitors, those that are seeking just to be perceived as a monetary good. We have these little blips all along the way of Bitcoin Cash. You could argue Litecoin, of Digibyte, of Bitcoin Gold, and now you see a little bit of Doge, but you can see that every single one of these is met by just a petering off, and it basically just goes away. That's not to say that none of these will ever take hold and take market share, but it is not very likely. And in fact, that pie will continue to grow and Bitcoin will continue to grow. Markets have shown a preference towards Bitcoin, which is slower as a payment system compared to the other digital assets, signals that the market currently values the security and the decentralization of that network. So it has that immutability, that resistance to censorship, and people don't really care if the block is every 10 minutes they're more willing to put their $100,000, $1 billion, $500 billion, whatever it is, into Bitcoin because it is the most secure, censorship resistance. It won't change its monetary policy. It's going to be here in 10 years than Dogecoin, which we expect to change. And I like that they address now in this article Ethereum's use case. Ethereum is not Bitcoin, obviously. Ethereum tries to be a decentralized, secure, smart contract platform. We're able to create these modular and interoperable contracts with even other chains that are able to do things that Bitcoin was not able to do. It is a Turing complete set of building blocks that you can do literally an endless thing. That's what a Turing machine means, is that you can do literally anything you can think of on this network. You just have to program it. The challenge is that the gas fees on Ethereum are getting to be prohibitively expensive because it is so successful at delivering this value for people. Network also allows different tokens to be issued on Ethereum. You might have heard of ERC20 or ERC721. These are standards of development that you can easily design a token. That's why we saw the ICO boom back in 2017 and 18. We're now seeing IDOs and other things. They're basically able to rapidly develop these tokens on top of Ethereum. They get the benefit of the security of that network with their token. Bitcoin network is scarce. It is arguably, in their definition, the only scarce asset, while digital tokens, broadly speaking of, are not. Just like we talked about. The primary value driver of Bitcoin is the scarcity and credible enforcement of the supply cap, which we talked about. Bitcoin is likely to be the primary monetary good, and all other assets are not likely to supersede Bitcoin in the monetary role. And this is where I deviate highly from this paper. And I think this is kind of in line with a lot of what they're trying to work here too, is it's very narrowly focused on the monetary good of Bitcoin. That is extremely important. And a lot of people say fix the money, fix the world, but it's missing a lot as well. And the future is going to be this multiple chain world, or have several chains that are doing separate things that need to be interoperable with each other. And things like Ethereum are taking a lot of ground in this area. Ethereum and its entire ecosystem of tokens and NFTs are incompatible with native Bitcoin. I would argue that Bitcoin is incompatible with Ethereum because Ethereum can be compatible with anything. The smart contracts are not there on Bitcoin to have it do anything on Ethereum. So an example of this is Bitcoin does exist on Ethereum. It is a wrapped version of Bitcoin, meaning that the ERC20 standards and construct is put around the Bitcoin itself in a semi-trusted way to be able to do things interoperably on Bitcoin. So Bitcoin is not interoperable with Ethereum, in my opinion. Interoperability will be the key development to the success of the digital ecosystems if we are to assume that multi-chain world in the future. And as you see here, Bitcoin's on the outside and it's transacting, and maybe it is the best form of money. And we have the Lightning Network and other things that are scaling it up significantly. But this other world of multi-chain needs to be interoperable, and Bitcoin by design is not able to do that. It doesn't want to do that. It is happy being where it is. Any project or other blockchain network that requires its users to believe they are transacting with a token that has real monetary value likely needs to be directly or indirectly connected to Bitcoin as an ultimate monetary good. I don't agree with this. There is an ability to create monetary goods. They might not be the penultimate or the ultimate, whatever it is, monetary good, but that doesn't mean that they're not money. We're seeing EIP 1559 and Ethereum create vast amount of potential use as a money. And to be honest, Ethereum is used much more in Web3 or the multiverse, in NFTs, in everything right now in digital assets than Bitcoin is. Bitcoin is used to store that value. Ethereum is used as the actual money of that, and it will continue to be, in my opinion. So I differ a little bit. Blockchains are undoubtedly important technology. However, centralized blockchains is relatively indistinguishable from a database. Shaq, I don't want to get into this. If you have a permissioned blockchain or a gated community or whatever, what the hell are you doing? That's not what blockchain is about. If applications can be built on top of existing blockchain networks rather than forced to start a new network, users will always choose that existing network. Build on top of Ethereum. Don't take Ethereum and fork the code into your permissioned system where you have keys to be able to reverse everything. you might as well be using a spreadsheet. You're defeating the entire purpose of what blockchain is. So this is what I wanted to bring to you guys, is they're arguing that Bitcoin is the first place that everybody should come when they get into the system, when they get into digital assets, when they're trying to think, should I allocate toward this asset class? And it is an asset class. It's only going to be growing. It's going to be huge. It's going to be trillions of dollars. It will, mark my words, mark the tapes. It will be over gold, $10 trillion, and I'm 100% confident in that. It might take a little while, 8 years, whatever, but it will surpass that. And their argument is that Bitcoin should be your entry. I would argue on top of that, yes, that's true. However, you shouldn't limit yourself like a Bitcoin maxi with your ostrich head in the sand to Bitcoin is the only thing that will accrue value. There's a difference between being the best monetary good and having it be the only thing that accrues value. And we saw that in the chart that we were looking at before, where the market share of Bitcoin, of this digital ecosystem, has been eroded, and it will continue to erode. The pie will grow, Bitcoin will continue to go up and to the right. However, there are more use cases being invented every single day. We are early here. This is the internet in 1993, not even 1995. Amazon just got incorporated as a bookstore. They haven't even pivoted to the everything store. The potential use case is so much bigger than Bitcoin that I would encourage you not to be a Bitcoin maxi, that I would encourage you to see the use case, even if it's not as a monetary good, but the use case that could accrue value in these networks. And then I would also encourage you not to get mired in the hourly, the 4 hour, the daily chart. By all means, don't look at the price of these assets every single day. They are extremely volatile because they are in price discovery mode. Every single one of these doesn't know exactly how much it's going to be disrupting everything. Therefore, that people don't know in a perfect information world how to value it. So that's the synopsis here. Yes, Bitcoin's crashed. Yes, it can go down another 50%. And I know you don't want to hear that. But when in doubt, zoom out. It goes lower left to upper right. Bitcoin should be your first entry into the digital ecosystem, in the digital space, in the digital assets. However, it is not the only digital asset, and I would argue that it's not going to be the one growing the fastest. There are others. Please do your own research. Don't ape into dog coins because your friend said that, or there's a sick TikTok video. Please do your research. Find out what the fundamental use case is and how it's disrupting, and will it be around in 10 years? That's what I recommend. That's the answer that I give to you when you ask me every single day, hey, the market crashed, what do I do? This is the answer, all right? Hopefully it helps. When in doubt, zoom out. This is Matt Voke. Hit the like, subscribe. See ya.